What's up, folks? It's been a while. Um, I had many exams in university, so like I told you 1.5 months ago in the last live stream, I need like 1 to 2 months to kind of focus on university, and also like in December and January price action wasn't that good. So yeah, I'm glad I'm back. Starting live streams every day again, every day live at 9:30 a.m. So we are a little bit late. I had some issues with OBS and TikTok, but now we are good. So yeah, mm, I would say let's just dive right into it and start with the analysis. Let me check if I'm on the right. Um, why is it showing 10:30 a.m.? Bro, what the fuck? Yeah, no problem. As you can see, New York session has been kind of wild. Price action is muddy. Like you can see on a daily chart, it's been a disaster for the couple. I don't know, for the last 2 weeks or so. I don't know. I was focusing on university during this time period, and then I was in Dubai on vacation for like 9 days. So I came back yesterday, and yeah, now we start with trading again. And yeah, I'm glad I'm back. I really miss it. So um, let's see how my reading price action reading skills are after like 1.5 2 months without trading. So yeah, starting off at the high time frames. Like I told you in the last couple of live streams during in December, I even told you before actually ICT talked about these liquidity pools. I showed you and outlined these relatively equal lows right here, which obviously ICT targeted in the previous live stream. I think it was not yesterday's live stream. Yesterday's Yes, I think yesterday's live stream he talked about these relatively equal lows, and for the people who've been here on my channel for a little bit longer, they knew I was talking about these lows. So I think these relatively equal lows are the draw on liquidity for the next few weeks or months. So bias is definitely bearish, and yeah, let's adjust this. Now it looks like the front month contract. So yeah, let me delete all these drawings. Okay, so our draws right here. Sell side liquidity pool on the daily chart. I hope we see some speed right now, because as you can see we have a huge gap lower on the daily chart. So that indicates weakness. So we should actually see now price heading towards these lows right here. Why? Because every time, or not every time, but if you have a clear bias in mind and price gaps towards your bias, That's most of the times indicating that price um, is wanting to go somewhere and it wants to go somewhere fast. Okay, so yeah, that's how I read this new week opening gap lower. So bias is bearish. We had a huge gap opening lower, and what I'm monitoring right now is this wick right here, and the current new week opening gap. So we mark them out like this. Is it at the open? Yeah, I guess. Okay, perfect. So let's drop down into the low time frames. As you can see, we had relatively equal highs right here. We took them out. So buy side has been taken. Relative downside took out this low right here, left this low intact, retraced up into this inverse fair value gap, and now we are here. Okay, so there are actually two options I have in mind. So, or how price could pan out in today's yeah, New York session, which is only like 20 minutes until 11 a.m. So, um, what I would like to see is that we leave this gap open, or at least a part of it. So, um, I would like to see price stay in the lower half. Here's the consequent encroachment, the midpoint. I would like to see price stay in the lower half of this daily, weekly, yeah, new week opening gap. So we have this day, which is also like the daily volume imbalance. Okay, so I want to see price retrace up into this daily volume imbalance, which is current new week opening gap. Stay in the lower half, leave a part of it open, and then head lower. If it does this, that's really indicating heaviness and that price wants to go somewhere. If we fill in this gap completely, which as you can see in these type of market conditions, which is high resistance liquidity, um, that's more likely to happen. So maybe we'll see what happens. But yeah, that's my stance on the high time frames. Now let's drop down into lower time frames. 50-minute. Yeah, you can see the daily wick that I outlined a few moments ago. We are heading towards the midpoint, which is red line. Let's go back to daily. Okay, this discount wick, consequent encroachment. We are heading towards this consequent encroachment. Okay, oh no, I'm on a 1 minute now. I want to be on a 15-minute. So relatively equal lows right here. 10 a.m. low took out these relatively equal lows. So bearish prices have already been delivered. Let's go on to the 1 minute. Yeah, I think that's a trade ICT posted a few minutes ago on Twitter or on X. I think I haven't watched it yet, but I think he took this trade right here. He sold here and targeted these relatively equal lows here, pre-market lows, which would have been the idea for today's New York session. As you can see, it has already delivered this delivered the sell side. So yeah, then we kind of entered high resistance liquidity conditions. So yeah, nothing too interesting for me, to be honest. So we left relatively equal lows right here. We have also London lows here, so we have a lot of sell side liquidity to be taken, but I think it remains to be seen if or how we behave, how price behaves inside of this green. Let me delete the daily wick levels. So important is how price behaves inside of this daily volume imbalance or new week opening gap. So yeah, to be honest, it's Monday, and with all these geopolitical upheaval, I'm rather patient and see what I can get, and I don't want to be the one who's trading um during these types of conditions. So maybe we get a reversal during the macro 1050 to 1110, and maybe we can see some kind of market maker sell model. I don't know. Like I told you yesterday, I came back from my vacation. So yesterday I also just peeked at the markets for like, I don't know, 20 minutes. So um, I need to kind of get in, and get used to trading again. So yeah, let me see. Mm, okay, like I told you, we want to see price stay below this daily volume imbalance midpoint, stay in the lower half, and then maybe seek a way down lower outside of this volume imbalance again, and then maybe we can frame an entry idea and target these 1 minute relatively equal lows, 10 a.m. lows here. Um, yeah, we'll see. We'll see. Oh, yeah, that happens when you haven't traded for a longer period of time. So completely forgot about the opening range gap. Okay, so let's just, like I told you, I didn't peek at the charts really before the live stream, so this is really raw analysis after 2 months of no trading. So as you can see, Friday's 4:14 p.m. close and today's 9:30 opening. That's our opening range gap. Okay, so but yeah, let's go back and have the daily volume bands on the chart again. So that also kind of aligns with our bearish bias because we want to see price stay in the lower half of the daily volume balance, which is also the current new week opening gap. Okay, so this green shaded box, and that also aligns more or less with the midpoint of the opening range gap. Okay, so we already delivered the opening range gap consequent encroachment, traded up into the midpoint. And now I would rather want to see price stay, like I told you, below this midpoint here, and give up the ghost. Mm, Reverse from here, because that would also mean we leave a part of the opening range gap open. So this part would stay open, which also indicates further weakness, okay? So yeah, that's a part of this opening range gap, high to low, that is left open for now, okay? So we want to see price get heavy now and reverse. If it doesn't and it completely closes in this opening range gap and also trades up into the upper half, that's not too indicative for low prices, okay? So yeah, we'll see about that. Like I told you, I kind of need to get used to reading price action again. It's been a while. Um, so yeah, I'm just reading price action and commenting on what price is doing. So yeah, I hope we can get out of this daily consolidation range. I mean, we already took out these lows right here in today's, no, not in the London session. When did we take out these lows? Yeah, uh, during Asia. Okay, okay. So yeah, I mean we wicked outside of the range. Okay, this is the consolidation range from here to here. So we wicked out of the consolidation range, but for price to really be able to head down lower towards these lows right here, we want to see price not only wick lower, but we want to see price wick or trade lower and close below this daily consolidation range, okay? And if we close on a daily basis, if a daily candle closes below this low and outside of this daily consolidation range, I think then we are ready to make our way towards these lows right here, okay? So but that remains to be seen for now, and we have to navigate through these markets and that range. So still high resistance liquidity conditions, nothing you would want to be keen on to trade. So rather stay patient and wait for your opportunity. Okay, now we see a bearish reaction of the new week opening gap midpoint level, and yeah, let's see. Let's see. Mm. So NQ is the only one of the three averages that was able to take out London high. Okay, so if we go back to electronic trading hours, you can see that, let's just put on indicator. Okay, now you can see all the kill zones, ICT kill zones, as you can see. Pre-market, on pre-market. Whoa, the time is off. What the why is hmm. Okay, so everything is 1 hour later. So normally London session. Let's just okay, perfect. Oh no. Okay, sorry. Nasdaq's not the only one who took out um London high. I just had my settings wrong. Bro, what the time is daylight savings time change again? Bro, am I stupid right now? Yeah, okay. This year daylight saving time started on Sunday, March 8th at 2 a.m. local time. Bro, I was confused. I thought it was in a couple of days and not yesterday. Okay. So honestly, that's also the reason why I'm kind of late. So we started the live stream at 10:30, 36, whatever, I don't know. And I just thought we had 9:36. So, bro, I wasn't aware of the daylight saving time shift. So you also have to change your um yeah, time settings on your indicator. So it's GMT -4 again. Now we have 2 to 5 a.m. Perfect. We have 7 to 9 or 7 to 9:30. Okay, perfect. So yeah, now we got that out of the way. Um yeah, 2 minutes until 11 a.m. What ICT told us in regards to the daylight saving time shift during that 2 weeks. So it's kind of weird in the when you look at time in Germany and in America, you see these 2 weeks. There are 2 weeks where price where time is um a little bit off. Okay, so if you look at macro time windows, or yeah, opening ranges and the precision of price delivery, you should expect some kind of maybe delay. Or okay, for example, if normally price takes out a specific liquidity pool during a macro, or during a macro normally the real price starts, okay, and during these 2 weeks, from start of the daylight saving time shift, 2 weeks from the starts on. So in other words, yes, there was the daylight saving time shift, March 8th. So for the next 2 weeks, you should expect some kind of, how do you say it? Like, you should expect the precision to be a little bit off. Okay, so that's also another reason why I'm not forcing myself to take a trade, okay? Just stay patient. No, obviously, if you see a setup that is in your eyes, it's perfect, it's your model, then obviously take it. But yeah, expect maybe to get stopped out a little bit more than usual. So yeah. Okay, now it's 11 a.m. Pre-market London and London opening was, I don't know, kind of consolidation. We just shared the same range more or less. As you can see here, not too much happened during London. So difficult to say what lunch macro is going to do. Also depends on how we trade inside of the weekly the new week opening gap. Like I told you, we want to see price stay below this dotted line here, which is the midpoint of the new week opening gap, and we saw a bearish reaction off of this midpoint. So now price is inside of the daily discount wick that I outlined a few minutes ago. The red line here is the midpoint of that wick, and this is the midpoint of the new week opening gap. Okay, so yeah, gotta see how price is behaving now inside of this green shaded box and around the consequent encroachment point. But yeah, obvious lows right here. But yeah, maybe seems like we want to explore higher prices. Maybe, I don't know. Bias is still bearish on high time frames, but yeah, considering the conditions we are in, it's maybe it's more likely for price to fill in this new week opening gap completely. So because yeah, like I told you, we have high resistance liquidity conditions, which just means that we just share the same range more or less. Like here you can see that this day completely stayed inside of this previous day's range. Okay, so we had an inside day here, we had still an inside day with this one, like ICT thoughts and the recent videos of the 2026 mentorship. Price can actually wick below the previous day's low or high, but if the body the body stays inside of the range, for example, okay, let me just draw this out. Okay, so we have this candle's high here, and we have this candle's low here. Okay, so if you look closer, inside day here, now this candle, if you look at this range, this candle wicked outside of the low, wicked lower than this day's low, and wicked up higher than this day's high, but the bodies stay inside of that range nevertheless. Okay, so this is also an inside day. If you just ignore this candle for now, if you say this candle was the candle before this day, okay, so of course this is now not an inside candle because the day before this the day before Friday was Thursday, okay? But if this Thursday's candle was this one, then this candle would be still an inside day because just of the reason that I outlined a few moments ago, okay? So, yeah. Share the same range, so high resistance liquidity conditions. Then we took out this high, stayed inside of this volume imbalance. If you go to here, you can see our price was rejected off of this daily volume imbalance right here, okay? And yeah, a lot of people always ask when to toggle this on and off. So what ICT taught us about that is you want to look at both of them, okay, toggled and untoggled, and you want to use the one that shows larger inefficiencies, okay? So now it's untoggled, okay? So we have the suspension block right here, but this volume imbalance is smaller than if you go to this view, okay? So that's the reason why ICT was looking at this volume imbalance right here. It's a lot bigger than this small one right here, okay? So, but I think it's not obviously it's not wrong to use this one, but as you can see, price the bodies stayed inside of this volume imbalance, and if you go back and toggle it again, if we draw it like this, you can see the body pierced through it and close above it, okay? So yeah, just experiment it and see for yourself. What the fuck, what happened? Okay, so I think on TikTok you couldn't see what I was toggling on and off, but if you are on trading view and you look on the bottom right hand side in the corner, you have the B adjusts, which adjusts the contract month. So now we are in the continuous chart MNQ1, okay, which is which is the continuous chart. And if you go to MNQ, what is it? H? Yes. Ah, bro, what the fuck? MNQH. Now you can see the front month. Okay, so this is the March delivery contract month for 2026, which you are actually if you trade live in a live account, you need to be trading this. Okay, you cannot trade a continuous chart. The continuous chart is only there to, yeah, give you a broader view on Nasdaq, because you have all these price action data points when you look to the left. Okay, if you go back to the March delivery contract month, you can see all of this. You cannot see this. Okay, so that's the reason why there's a continuous chart. And yeah, if you are on the continuous chart, ah, you have this B adjust, okay, and Right next to it, you have um, you can toggle the button right next to be adjust, and this gives you this view on Nasdaq. Okay, untoggled and toggled. As you can see, we have this fair value gap right here. When it's toggled, and if you put it off, you have a suspension block. Okay, so just look at both of them and see where larger inefficiencies are, and use this one. Okay, so when trading up in here, ICT was looking at this one. Why? This volume imbalance right here is bigger than when you have it untoggled. Okay, so now it's toggled. You see price reacted off this volume imbalance, got rejected. Bodies stay below it, but the wicks do the damage. Okay, wicks took out this high right here, got rejected, saw lower prices, but still inside of the consolidation range. Okay, retraced up higher, and respected this auto block midpoint right here, got rejected off of the auto block daily auto block midpoint, and now heading lower, headed discount new week opening gap. So yeah, I guess that's it for today, guys. A brief live stream. Honestly, I wanted to start right at 9:30, but yeah, um, I thought new daylight saving times is in a week and not this week. Like, also, it was yesterday on Sunday. I thought it was this Sunday and not last Sunday. So yeah, whatever. So 11:30 a.m. I'm only trading 9:30 to 11 a.m. or London or PM session. So I'm not trading the lunch macro and stuff. Yeah, if I'm in a trade, maybe I took an entry during 10:50 macro, like 10:51, and my target hasn't been hit, then I'm holding the trade a little bit longer past 11 a.m. But I don't take new entries past 11 a.m. So I think that's it for today, guys. Was a brief one. We yeah, we see each other tomorrow 9:30 a.m. Eastern Standard Time. Don't forget the daylight saving time. Okay, so when you have indicators, you need to adjust the time zone. So be aware of that. I guess I catch you tomorrow, guys, and be safe.